All right, so if you're not a U.S. resident, but you've got some financial ties to the United States, there is one tax form you absolutely positively need to know about, and that is the 1040NR. We're going to break down exactly what it is and, more importantly, who this is for. So let me just ask you a quick question. Are you a non-U.S. resident, and are you earning any kind of income that's connected to the United States? If you're nodding your head yes right now, well, then you are in exactly the right place. So what is this form really? Well, to put it simply, Form 1040NR is the official tax return that the IRS uses for foreign individuals, non-residents, so they can report any income that's connected to the U.S. Think of it as the single most important document for your U.S. tax compliance. Now, you've probably heard of the standard Form 1040, right? That's the one that U.S. citizens and residents use. The key thing to get here is that the 1040NR is a whole different ballgame. It is specifically, exclusively designed for non-residents. It basically puts you on a completely separate tax track. Okay, so that brings us to the big question, right? How do you know if you are one of the people who actually needs to file this thing? Let's dive in and figure out exactly who has a U.S. tax obligation. So you're probably going to have to file if you have certain kinds of U.S. income. We're talking about things like running a U.S. business or maybe collecting rent from a property in the U.S. It also covers something the IRS calls effectively connected income, or ECI. That's really just a fancy way of saying profits you make from, being actively involved in a U.S. business. But here's a really important point. It's not just about owing the government money. You also file this form to claim a refund or to use those really helpful tax treaty benefits. Let me give you a super common example. Let's say you live outside the U.S., but you own a U.S. LLC, and that LLC sells stuff to customers in America. All that money you're making is directly tied to that U.S. business. And what does that mean? It means you've got to report it using a Form 1040NR. Now, I know what you might be thinking. Another form, what a headache. But look, filing isn't just a chore. It's actually in your own best interest. So let's talk about the why, the purpose behind it, and the actual benefits you get from staying on top of this. So what does this form actually do for you? Okay, think of it in a few steps. First, it's where you report all your U.S. income. Simple enough. Second, it's where you list your expenses and deductions, which is how you lower your tax bill. Third, it does the math and figures out the bottom line, what you owe, or, fingers crossed, what kind of refund you're getting back. And last but not least, this form is your golden ticket to unlocking those powerful tax treaty benefits between your home country and the U.S. So, here's the bottom line. Filing is a huge advantage for you. It's the only way you can claim a refund if too much tax was withheld. It's how you activate those special tax treaty benefits. And this is a big one. It creates an official paper trail of your compliance, which goes a long way to protect the status of your business in the U.S. Okay, as with any tax form, you know there are going to be deadlines. And trust me, understanding these dates and what happens if you miss them is absolutely crucial. All right, get ready to circle some dates on your calendar. If you had U.S. wages, your deadline is the one you always hear about, April 15th. But for most other non-residents, the really important date is June 15th. And hey, if you need a little more time, you can file for an extension, which bumps your final deadline all the way to October 15th. And that, of course, brings up a really important question. What are the stakes here? I mean, what really happens if you file late? Or maybe you just don't file at all? Yeah, the risks are pretty significant. You don't want to mess around with this. The IRS can hit you with some hefty failure to file penalties. You also just automatically forfeit any tax refund you might have been due. Gone. You also lose your right to claim those incredibly valuable treaty benefits. And to top it all off, interest just starts racking up on any tax you owe. It's a bad spot to be in and one you definitely want to avoid. Okay, I know that was a lot to take in, so let's pull it all together right now into a quick guide. That way, the main takeaways are super clear. Look, if you only remember one thing from our chat today, let it be this. Understanding whether you need to file is essential for protecting your U.S. business and tax status. Seriously, this is about way more than just numbers on a page. It's about protecting your financial future in the U.S. So, with all that in mind, here is your compliance checklist, your game plan for success. Use that 1040NR to report all your U.S. income, claim every deduction you're entitled to, apply those tax treaty benefits, get back any potential refunds, and the big one, stay fully compliant and in the clear. And that just leaves us with one final, very important question that only you can answer. Is your U.S. income compliant? Something to think about.